And with the Facebook IPO set to launch soon, early investors are expected to cash in big. But how exactly do startups get matched with investors, and what are entrepreneurs looking for in the people who give them money? For more on this, let's bring in Ted Hollifield, a partner at Dorsey and Whitney, who joins me here in the studio. Welcome to Bloomberg West, Ted. So you guys put out a whole report on this. What sort of trends are you seeing in what entrepreneurs are looking for in investors?
Terrific. Well, entrepreneurs have always been interested in the best possible terms for an investment. But increasingly, the really good news is that there's a lot of competition to be in the best startups. And it's giving the entrepreneurs the opportunity to really select investors that actually understand the business segment that the startups are operating in.
And one of the things you found is that traditional VCs are actually making a comeback, which I didn't realize they'd ever really gone anywhere.
Yes, so we first went out and surveyed startup entrepreneurs in 2010. And when we conducted that survey, what we really saw was there was actually a competition forming between angel investors who had the ability to move faster than traditional VCs and often really understood a particular marketplace very well, and traditional VCs who had the benefit of larger funds, but often because they were moving more slowly, would miss out on some of the hotter investments.
So traditional VCs are back?
Very much so. So some really wonderful news for VCs in this survey, that entrepreneurs are interested in those traditional strengths of VCs. So the entrepreneurs are feeling very positive about their businesses, about the opportunities for those businesses, and they see the chance to put more capital to work. And that makes traditional VCs more attractive. You
also came up with a ranking of VCs in the eyes of entrepreneurs. Andreessen Horowitz at the top. They've only been in the business for 3 years. Sequoia #2, Kleiner Perkins #3.
Well, and that's the ranking that came back from the entrepreneurs themselves. So we asked them on an unprompted basis to tell us who is your dream investor. And those are the investors that they came back and told us fit their criteria.
Okay. Did they give any reasons why Andreessen Horowitz? We've talked a lot on this show about how Andreessen Horowitz is sort of changing the model for traditional VCs, becoming more of a full-service shop. What is it about them that entrepreneurs like?
Well, it's really a tribute, I think, to Mark Andreessen, who's a little bit of a poster child for the perfect investor right now, where he represents that deep understanding of the sectors in which he invests, but he also backs those sectors with significant capital and moves quickly in making his investment decisions.
Now, how will the Jobs Act change all of this?
Well, it's really interesting because one of the things that we were looking for in this survey is the ability of the marketplace to incorporate an additional infusion of capital into the startup ecosystem. So our expectation is that the crowdfunding provisions of the Jobs Act will increase a lot of the early stage funding that's available to companies. What we saw is that on a regional basis, where you have a good, healthy ecosystem that's funding startups, it appears that that ecosystem is definitely able to absorb the additional capital going into startup companies, and that VCs are more than willing to kind of pick up the baton at the next stage and fund those companies once they've identified kind of the cream of the crop from the initial funding stage.
Well, it certainly is an evolving ecosystem always here in Silicon Valley, so we'll have to see what happens next year when you guys put out this report. But Ted Hollifield, partner at Dorsey and Whitney, thanks for stopping by.
Thank you so much, Emily.